Hello guys and welcome again to my channel. So we are still on the job order cost accounting number 2. Okay? So on the past episode we started with the concept of the job order. So on the past episodes also, on the previous episodes, because maybe this is already video number 6 for me in cost accounting or manufacturing accounting. So actually, in the past episode, I promised you that we will have an illustrative problem. So this is an illustrative problem that came from a book. I cannot remember the book, but this is coming from a certain reviewer. The author is a Filipino author. So um, I got this, and honestly, you really need to have the knowledge of all the episodes that we have in order to answer this. So you need the knowledge about direct materials and direct labor and the factory overhead, especially the difference between the actual factory overhead under factory overhead control account and the factory overhead applied under the same account, factory overhead applied. Okay? And aside from that, you have to know the accounting for direct materials, direct labor, and factory overhead, like the entries, as well as you need to understand the relationship between the three inventories. You start with the raw materials, which is the stage 1, by the way, because that is 0% complete or that is still unconverted. And we have the direct labor. We have the work in process inventory, which is the partially completed already. That's stage 2 for me. And the third one is the finished goods. So you have to have those knowledge. And aside from which, you have also to have a knowledge in the cost of sales computation of manufacturing coming from direct, direct materials beginning, direct material purchases, raw materials available for use minus raw materials, and you have the raw materials used, and then plus direct labor plus factory overhead applied, everything you have to have that. And lastly, in the past episode, you need to know the concept of the job order costing system, which is it answers only on the costs that were incurred. That might include direct materials, direct labor, factory overhead currently, plus the direct materials, direct labor, factory overhead of the beginning inventories. You have to find where did it go. And normally, it goes to first finished goods or cost of sales, something like that. So, on the job order costing system, let me answer that the costs, where does it go? It is usually distributed between jobs. And remember, the jobs and job order costing system are unique to each other because that is based on the unique specifications of the client. Okay? So you need all those to answer this. So let's answer this. First, BBG Company has no work in process at the beginning of January 20x5. So that means all of the jobs maybe of the company in the previous periods has been finished. Okay? Or secondly, it could be interpreted as the company has only started. So there are no previous periods because the company did not yet exist in the previous periods. Okay? So anyway, there is no work in process at the beginning of January 20x5 of BBG Company, and during the month there are 3 jobs. And of course, there are direct materials, direct labor, and overhead that were incurred during the month. Of course, the twist is there are blanks in uh, in this particular given. So the direct labor for G2 is blank, the direct materials is blank for M3. So that is the twist in this problem. And there are other information. Like during the month, the company completed job K1 and it was transferred to the finished goods at a cost of 82,500. So that means this is part of the cost of goods manufactured job K1. So it was started now and it was finished also now in this current month. G2 and M3 were not completed. they are accounted as work in process at a cost of 148,650 at the end of the month. Actual factory overhead totaled 48,600. And then the question is, what is the under or over applied factory overhead? Because we have here the actual. So we have to get all of the overhead applied here. We have to compare, and we can already answer the question 1. And then the applied overhead rate. And normally, the overhead is applied based on the direct labor. So we're gonna get that, the applied overhead rate. And the direct materials issued to production. So this one plus this one plus this one. So there is a blank. So meaning, in order to answer all the required, we have to complete this, including the unknowns. Okay? So I will repeat this. If you are answering some problems like this, you have to go first on the required so that you'll be guided on what to do or what is your direction. Your solution will go to that. Because if you are not going to look at the required first, sometimes you will be ineffective and inefficient in solving. You might be solving for something that was not required. Okay? So in order to be logical about it, you have to think first of looking at the requirements so that you will have a direction of your solution. Okay? So let's try to answer. So first off, the clues are during the month, the company completed job K1 to the finished goods with a cost of 82,500. So that means, since this was completed, this is actually 82,500. So we can already see the overhead applied. So 82,500 minus 24,000 minus 42,000. So we have 16,500. Now, you can already see here the overhead applied, 16,500. The ones that we got recently, we have the given 24,750 plus 6,050. The factory overhead applied in total is 47,300. Now we can already compare this, the applied versus the actual. And we're gonna answer already the required number 1. So what was applied is 47,300, which is lower than the actual. So this is under applied. We already know that this is under. By how much? So 47,300 minus 48,600. That means this is under by 1/3. That's already requirement number 1. So again, if this is the result under application, that is unfavorable for the company. Because based on historical experience, they are expecting, or the BBG Company is expecting, to only incur 47,300 on the overhead applied. Okay? However, as it turns out, the actual is 48,600, which is not good. It's as if the budget is this one, the budgeted cost, and you have incurred a cost of 48,600. Okay? So that's unfavorable for the company. Now, the next one is the applied overhead rate. So this is easy. Why? Because as you can see, on the direct labor, it was given here that this is 8 per hour. So you can have the percentage, of course, like 16,500 divided by 24,000. That's 68.75%. 68.75% of direct labor cost. That is if that is the ones being asked by the problem. The original problem of this one is that this is a multiple choice, and this is not the applied overhead rate that it is looking for is the rate per hour of factory overhead, not the percentage based on direct labor cost. Okay? However, you can answer this. However, in the problem again, the choices are six per hour, something like that. So meaning they wanted to have the applied overhead rate of rate per hour. Okay, so how do we do that? So again, we have 24,000 divided by 8. That means 3,000 hours were rendered by the employees for job K1. So meaning, since overhead applied is based on direct labor also, as well as direct labor hours, we can already get 16,500 the total cost divided by 3,000 hours. That means the overhead applied is 5.5. That's it. That's the answer. It could be 5.5 per hour per direct labor hour, or 68.75% of the direct labor cost. Okay? So we have this 5.5 per hour. It's because it's the ones required by the multiple choice question, which is the original um, problem. The original problem has multiple choice questions, and the multiple choices gives this rate per hour. Okay? Now, honestly, for me, I really wanted the percentage based on direct labor cost because it's much easier. Like for example, this one, if we wanted to get the G2, you just have 24,750 and you already know that this 24,750 is 68.75% of this one. So this is 100%. So what will I do? 24,750 divided by 0.6875. That's easy. That's 36,000 already. Instead of, for example, this is 5.5. So you have to get the number of hours of 24,750 based on the rate 5.5. So 24,750 divided by 5.5, that is 4,500 hours. Okay, 4,500 hours at 5.5. So this is also 4,500 hours. So you have to get the rate, which is 8 per hour. So that means 4.5 times 8. It's still 36,000. But as you can see, the percentage is much, what do you call this, much more direct, much more efficient. You're faster. So, which is why, as much as possible, I use the percentage based on direct labor cost in getting the applied factory overhead. Okay? So that's it for requirement number 2. And then lastly, we have the direct materials issued to production. So, based on this given, it is said that the G2 and M3 were not finished, these two. Okay? So, since they are not finished, they are in the work in process. However, the crucial given here is this 148,650. Okay? Because they are, the G2 and M3 are accounted as work in process with a total of 148,650. And everything is already there except for this one. So you could just squeeze. So 148,650 minus 36,000 minus 61,000 minus 24,750 minus 88 and minus 6,050. You have 12,050. Yeah, 12,050 if I'm not mistaken. This is 12,050. So since you got this already, you can get the requirement number 3 because 12,050, the question is direct materials issued to production. So 12,050 plus 61,000 plus 42,000, that's 115,050. And that's it. So you have uh, used your knowledge logically in order to answer these questions. So focus on the required. So you cannot really answer this if you don't know anything about applied and actual factory overhead, and then you don't answer this if ever you did not know that the overhead applied is normally based on the direct labor cost or the number of hours of the direct labor, something like that. You will not know about answering this if you do not know the finished goods and the work in process, something like that. So that's how you use what you've learned so far in answering problems. Okay? Now, let's have the final topics related to job order. And the final topics are talking about, first we have the accounting for waste, accounting for scrap, we have accounting for rework, and accounting for spoiled units or spoilage. Okay? So let's differentiate first scrap and waste. So if we talk about scrap, those scraps are, what do you call this? Part of the byproducts of your main product, something like that. That is a scrap. Okay? Like for example, um, if you're a tailor, of course, that is part of job order costing system still. If you're a tailor, it's because your clients has unique specifications. Like for example, jersey for intramural games, something like that, or wedding gowns, if you are into wedding gowns, something like that. So there are scraps there. Like for example, the leftover, what do you call this? The leftover materials, the leftover materials that could be turned into rugs or something like that. So those are scraps. Okay, meaning you could sell them. You could actually sell it to another person at a price, at a cost. That's other income. Do you get me? Waste, however, you cannot sell those waste. Normally, you will incur cost in order to dispose of them. So this is a little bit useful. This is not. Okay? How about rework? Rework is normally there is a product and there is some little defect and you have to rework on it. So additional direct materials, additional direct labor will be introduced to that one. Okay? How about spoilage? That is a finished goods. There is some defect and correcting that defect will be not cost effective. So that is the difference between these two. This could still be reworked on. This will not be, because if you remedy the defect, you will incur more cost than benefit. So those are spoiled units. Okay? So let's first talk about waste. So normally, waste, if there are waste and you'll have to dispose of it, you will incur a cost. Normally, the entry would be expense, credit cash. That's it for the waste. Okay? So, and you have to expense that one because normally the waste is already expected. When you take on the jobs and there are waste, like for example, you are working with chemicals, of course, you should expect as a businessman that there will be waste. And you should also expect that you have to have a cost of disposing all of those. So normally, the entry is expense, credit cash. And you do not put that in the work in process because the meaning of debiting it in the work in process, that means you are charging it to the client. Because work in process is composed of direct materials, direct labor, and factory overhead. Basically, the total cost for the customer. Now, if it will be finished, most of the times, the manufacturer for job order costing system or those that are giving customized products to the customers, they will just put a markup on that cost, and that is already the selling price. So the moment that you put this one in the work in process, that means you are letting the client pay for it because that will become part of the cost. and then you will put a markup on that cost. So as if you are getting money from the customer because of it. Unless that waste is not part of your normal operations. You could put that in the work in process. You put that, for example, in the indirect material something. Okay? So that's accounting for waste. Let's go for scraps. For example, your scraps are immaterial in nature. Immaterial in the sense that it could only be sold for a very small amount. Okay? So what will happen? Your accounting is you have to wait for the scraps to be sold. So if sold, then you will have debit cash and then other income if you wanted to. Or else, you can have debit cash, and if it is traceable from a certain job, like job K1, so you could credit it to the work in progress so that the cost to the client will be lower, especially if ever the arrangement between the client is total cost plus 40% markup, something like that. The client will really save something. Okay? If this is the entry. If it is traceable to a certain job. Okay? But if it is not, it will be like this, or it could be cash, credit, cost of sales. Something like that. So if it is credited to cost of sales, your net income will still increase. The same with the other income. If there is other income, your net income will still increase. So it depends on how you are going to acknowledge or record the scraps when sold. So those are for immaterial. But there are some scraps that are material. So if those are material, if those are important enough, of course, you have to make an entry on the production itself, production of scrap, before selling it. So you will recognize scrap inventory. So aside from raw materials, aside from work in process, aside from finished goods, you will have this scrap inventory. And you will make a cost for the scrap inventory, example, 5,000. Since that is material, let's have 100,000. Scrap inventory, the credit will depend upon if ever it is traceable to a certain job, then work in process. For example, this is traceable to job 3, so work in process 3. The work in process account will be deducted. The cost that will be shouldered by your client will be lower because of that. Okay? And when you sell that, for example, for 120,000, debit cash, 120,000. Scrap inventory, 120,000. And then, credit gain on scrap inventory. Ay, scrap inventory is only 100. So, gain is 120, is 20,000. So, you see, on the immaterial, you don't need to make an entry as soon as the scrap is born, is produced. You're just going to make an entry when it is sold. Whereas, on the material scraps, you have to establish scrap inventory already at the production of the scrap. Okay? So, the credit could be work in process if it is traceable to a certain job. Okay? In this case, job number 3. Okay? Or, if it is not traceable, then you could put that in the credit cost of sales. Or, you could have other income. So, or you could shoulder it as factory overhead control. You can put it in the actual factory overhead control account if you wanted to. Okay? But basically, those are the options. Work in process 3, cost of sales, if it's not traceable to a certain job, so it's chargeable to overall production or other income. Okay? So that's how you account for the scraps. When it comes to the work, if you are to the work on certain items or all of the items because there are some a little bit of defects, like for example, um, the paint on a certain product that you are making is a little bit smooshed, something like that, or there is wrong paint. So what will happen? You have to rework on the wrong paint. So the direct materials that you are going to incur, the direct labor, and the additional factory overhead that you're going to incur, first, you can charge it to the work in process. That's what happens, right? So raw materials inventory, salaries payable for both the direct labor and factory overhead. You can charge it to the work in process if ever the rework is chargeable to a certain job, traceable to a certain job, especially if ever the rework is the fault of the client. So that will happen. So if it is the fault of the client, that will happen. The work in process will be debited. So the cost of the client will be bigger and you can collect them from your client later on. Okay? Because again, mostly these jobs are cost plus markup. That is your sale price or revenue. Okay? However, if the rework is due to the fault of your production, production team, something like that, or production equipment, so that will not be debited in the work in process. It will be debited on the, let's put it on factory overhead control. That is your actual factory overhead. And the ones that will suffer for that rework will be your company because that will not be charged to your customer. Because again, that is charged to all production because it might be the fault of your production system or production line or production equipment or production people. You understand? Or it's not traceable to a certain job. Okay? So that's it for the accounting for rework. How about spoilage? Example. So for example, here in the rework again, if there are 1,000 cups, because you are making cups, that has defects and you have to rework on them. If this is one, this is two per cup, and this is one per cup, so you have four per cup. So four times four, 1,000. So 4,000 will be debited to WIP. The raw materials inventory would be 1,000, and the salaries payable is 3,000. If again it is the fault of your customer or the rework is directly traceable for a certain job. Okay? But if it's not, again, instead of putting it in the work in process, the whole 4,000, it will go to the factory overhead control. Okay? Now, let's go to the spoiled units. What if this is spoiled? What will happen on the spoiled is that there will be no rework already because if you rework it, the cost will be greater than the benefit. It's as if you are starting all over again. You get me? So, here on the spoilage example, you have your job, 5,000 cups. You have produced that already. We have direct materials, we have direct labor and factory overhead already for that one. And you have 5, and then 10, and then 15, something like that, per cup. So that means you have already finished 5 plus 10 plus 15, 30 per cup is the cost times 5,000 cups. You have already 150,000 which is found on the work in process because you are going to charge this to a customer. Okay? Now, the question is, what if 1,000 cups are defective, spoiled, something like that. So that means this could not be reworked on. And the customer finally got the 4,000 cups only. The 1,000 cups are wrong in color, something like that. So since that is wrong in color, first off, you have to understand that the problem for spoilage is your loss. Again, this will become a loss because this 1,000 cups, although they are finished goods, you can only sell it at lower than the cost. So for example, a jobber or something like that. So again, this is the story. 5,000 cups, you have already produced 5,000 cups, 30 per cup. 1,000 cups are spoiled. And you can sell it only at 25 each. So the 4,000 good units has already been given to the client. Okay? The 1,000 cups are sold to a jobber at 25. Okay? So what will happen now? First off, on the work in process of 150,000 for the 5,000 cups, you have to deduct the 1,000 cups. So 1,000 times 30. Because again, you have produced it at 30 per cup. So that means 150 minus 30,000 cups, you have 120,000. That's the work in process. That's the one that will be charged to your customer. Okay? Now, what if you sold it already to the jobber? So of course, if you credit the work in process, if you will have an entry of 30,000, of course you will have a debit. And the debit would be spoiled units. So from work in process, inventory, it becomes another inventory, which is what we call as spoiled units. Okay? Now, we sell it to the jobber. So we have cash. That's only 25 times 1,000 cups. We have 25,000. Okay? And then, you have to credit the spoiled units. The spoiled units has a cost of 30,000. So there is lacking. The entry is not balanced. So, this is where you will start to trace if that is traceable to a certain job or is it the fault of the customer. And if it is the fault of the customer, you have to charge the loss to work in process. So that aside from having 120,000, they have to shoulder the loss of 5,000. So that they'll have a cost of 125,000 which they will pay because again, the loss or the spoilage is due to the fault of the customer or directly traceable to the job of a certain customer, related to a certain customer. You know what I mean. Okay? So that's it. The problem on the spoiled units is the loss only because you can sell these spoiled units at lower than the cost normally. So, what if it is your fault? If it is your fault, instead of debiting it in the work in process and letting your client shoulder it, you can put it in the factory overhead control. Because it's probably your fault. If it is not the fault of the customer, it's the fault of your production or anyone in your production team. Okay? So that will become part of the factory overhead control, the 5,000, which is chargeable to your overall production. Okay? The higher the factory overhead control or the actual factory overhead, the higher will be the cost of sales later on. Okay? So that's it for the spoiled units. Unless you have here allowance for spoiled units. For example, on the factory overhead, you used to have an allowance already for spoiled units. Sometimes, a businessman will be able to give allowance to those spoiled units if ever it has been observed in the historical experience that there are really spoiled units in each of the production that you are making per job. So you can make an allowance. Like for example, in the 15 here, the allowance is 2 pesos, allowance for spoiled units. 2 allowance for spoiled units. So what will happen if that is the case? So that means you are already admitting that there are times that your company produces spoiled units. Okay? So what will happen is that if ever it's your fault, this will still be the entry. You'll have the factory overhead control 5,000. But if it is the fault of the customer, they should not be charged with this 2 pesos allowance for spoiled. So instead of course, 30 pesos is the cost of the cup. You sold it at 5. So your customer will only handle 30 without this allowance. This should be 28 only. So your customer will only absorb a loss of 3 pesos per cup. Again, the cost is 30 pesos per cup. But that includes an allowance for spoilage of 2. So you are already thinking that each of the production, your production is not perfect, there will be spoiled units, but only up to 2 per unit. Okay? And then, so since 2 per unit is the allowance for spoiled, actually, the cost of the cup is only 28 if we are not going to include the allowance for spoiled units. Okay? And remember, it was sold for 25 only, the spoiled units, the 1,000 cups. So of course, it would be unfair for your customer to handle 5 pesos, 30 minus 25. You are at a loss of 5 pesos times 1,000, 5,000. That is unfair for the customer. Because you already admitted that there are actually spoiled units when you produce. Okay? So the customer should only handle 28 in excluding the allowance minus 25. That's 3 times 1,000 cups that are spoiled. So the amount that will be charged to work in process is only 3,000. So that is just the twist here. Okay? So the same with rework and spoilage. On the rework, of course, on the rework, you have to introduce another direct materials, direct labor in order to fix the units. So if it is the fault of the customer or directly chargeable to a certain specific job, then direct materials, additional direct materials, direct labor, and factory overhead will be debited to work in process in order for the customer to handle it. Okay? Remember, the work in process is debited in the direct materials, direct labor, and factory overhead of a certain job. Okay? And then, normally, these customized manufacturing entities are just getting the cost and then putting a markup on it. So that means if ever you debit it in the work in process, the cost of the direct materials, direct labor on the rework, that means it will be paid for by the customer ultimately. Okay? And as to the spoiled units, there will be no rework already because the cost is much more bigger than the benefit that you're going to get. Like for example, in this example, you have 30 pesos per cup. If you repair it, it will cost another 20 pesos per cup, for example. So it is unwise to rework on it. So we're going to have this one, spoiled units. Okay? On the spoiled units, the accounting is centered on the loss that you are going to incur. So aside from separating the good units from the spoiled units and making an entry of crediting the work in process and debiting it into the spoiled units, the center is actually the loss that you're going to incur when you sell that spoiled units. Is the loss chargeable to the customer or to a certain job? If it is, you put that in the work in process. Okay? So that the client will ultimately pay for it. Okay? If it is not, then it is charged to your production. It will be debited to the factory overhead control account, and then the ones that will suffer because of that loss is you as the company. It will be charged to the overall production. Okay? So that's it for the job order costing as well as the accounting for waste, scrap, rework, and spoilage. And I hope you understood. And if you did, please click like, subscribe, and hit the notification bell and share it to the ones who needs it. Okay? And see you on process costing. So the next topic that we have here in the cost accounting series is process costing. See you on the next one.